Times are uncertain. The coronavirus has made this an unprecedented time for business. This is the time to become a smarter and wiser investor. If you're thinking of investing in something during this crisis, you have a huge opportunity. In this video, we are going to learn from Warren Buffett's decisions and philosophy in life amid this crisis journey. Warren Buffett is a behemoth in the investing industry. He was nicknamed the Oracle of Omaha. He is living the American dream. It is the financial success that we dreamed of. But how did he become one of the richest men in the world? First, let's take a look at his early life, his entrepreneurial ventures and failures. Then we'll discuss the biggest takeaway in his $85 billion investment strategy. And before we continue, don't forget to like and subscribe to our channel. Warren Buffett is said to be a mathematical prodigy. From a young age, he was interested in business and investing. He actually started his investing career at the age of 11. He bought 3 shares of City Service Preferred at $38 per share. It dropped to $27. Still, he held on to it until it became $40. Then he sold. That was a decision he would regret. Soon after, it shot to almost $200 per share. This was his first major lesson. He cited the experience as a lesson in patience. If you aren't willing to hold the investment for multiple years, you shouldn't even consider it. At the age of 14, he worked as a paperboy and invested his savings into 40 acres of farmland. He had negotiated a profit-sharing agreement with a Nebraskan farmer. He also used his savings to purchase pinball machines that he placed in local barbershops. Warren showed us from an early age that we must start saving money as early as possible. When you start saving right now, you'll have much more money in the future compared to starting in your later adult years. Warren, as we can see, also built multiple streams of income at only 14 years old. Diversifying and investing your money into income-producing assets is how you become rich. The earlier, the better. His successful ventures diminished his desire to attend college, but his father encouraged him to continue his schooling. He obeyed and graduated with a degree in business at the University of Nebraska. Later, he was rejected at Harvard University and ended up enrolled at Columbia Business School. He graduated with a Master of Science in Economics in 1951. So that's the background of the legendary investor. But what about the strategy that took him from a small business as a teenager to one of the world's richest? Warren once said, "I always knew I was going to be rich. I don't think I ever doubted it in a minute." That's the first key. Confidence. If you don't believe you'll be rich, then you probably won't. These things don't happen by luck. Wealth is created through years of work. From there, Warren would set goals and work towards them. As the saying goes, we have to begin with an end in mind. That means we have to make a plan and we have to execute it. Buffett is not choosy when it comes to business. He invested his money wisely and he took on different opportunities to achieve financial freedom. He became a disciple of the father of value investing, Benjamin Graham, who believes that you don't have to follow the crowd, but you have to be firm in your principles to be an intelligent investor. That's the basis of his entire strategy. Not quick flips, not day trades, but value. Buffett and his team look for value. They ask, what will the stock do 10 years from now? They do not care about tomorrow, nor next month, nor even next year. Berkshire Hathaway is Buffett's massive company. Buffett bought Berkshire Hathaway because he saw an opportunity to make money. He shifted its focus from traditional textile ventures and converted it into a holding company in which he has built a corporate empire. Berkshire owns a variety of well-known private businesses such as Geico. Along with private companies, their portfolio consists of many public companies like Apple. Today, they are the 5th largest public company in the world in terms of market capitalization. The company makes upwards of $250 billion in revenue yearly. Warren is always frugal by nature. His boots are on the ground and he is seen as humble. He has a sound philosophy of how he does business. Just by looking at it, he basically does his principle over and over again. His investing process is a rinse and repeat cycle. He saves, then he invests, then he educates himself, then he invests more. However, Buffett never invests in something he doesn't understand. He once said that if a young person who had just finished schooling was given only 20 chances in life and used his strategy for investing, that person would end up very rich. His theory is that when you give more time and thought to your important investments, you tend to go all in on a few highly probable wins. This gives you a great chance for success. The biggest takeaways from Warren's strategies are as follows. The first, be patient. Do not jump into investments carelessly. We have to educate ourselves and do research first. If we are not familiar with it, pass or seek opinion with a trusted expert. Second, diversify. Warren has his hand in many pots, from publicly traded companies like Coca-Cola to private companies such as Dairy Queen and Geico. Third, start early. The best time to start was at 15 years old. The second best time is now. If you don't get started, you'll never have a chance. 4, strategy. Without a good strategy, you are doomed to fail. Whether it's Warren's strategy or someone else's, you need a plan. Despite being known as an investment guru, there were times when Warren Buffett made mistakes. And I liked his attitude of owning his errors and assuming full responsibility when he fails to deliver to shareholders. He did not pass the blame on others. We can learn from his good example. It is what great leaders do. So the question now is, how are you investing your money and what do you expect your money to produce for you? And if you aren't investing, why not? Comment your answer below and we'll respond to help you out. If you enjoyed the video, don't forget to click the like and subscribe button. Let's continue to be better and wiser in investing. For more business tips, follow us on Instagram.